Morning, guys. So today's today's webinar, we are we're going to talk a little bit about. I'd like to talk a little bit about fundamentals with you, and moreover, just understanding how the world works, basically. And for a lot of you, this will be a repeat of things you've heard in the past, and for some of you, hopefully, there's some new information. But I think it's important to realize that there's no tricks here and that everything seems to repeat itself just in a massive, huge, humongous wheel. All right, and there's only so many things that you can see, and if you keep your ears open, you pretty much get told what to do in Forex, which is kind of nice. Things are fairly transparent. So what I'd ask is that you post your questions as needed, and I'll address them kind of as we go through, and we'll go from there. Okay, and I'll say a few things on FOMC, which I think is going to be one of the more dull FOMCs that we've had. But I still think it's important just because I think the Fed's going to be a little more passive and just a tiny little bit more dovish this time around. All right? It's been a while since I've done one of these. I think a couple of months. I was in South Africa for a while. All right, guys. So I don't know how many of you have seen the new series of Cosmos that was released. Presenters Neil deGrasse Tyson. Really interesting. Kind of cool. I mean, that science dumbed down, but it's still interesting. And thanks, Matt. Yeah, 1310. And it's interesting because the science dumbed it down, but what he talks about is the difference between weather and climate. All right, so everybody's been talking about climate change lately, etc., and this is going to become an environmental speech by any stretch. But I thought that this was pertinent to Forex. All right, and I certainly wouldn't be doing my job if we didn't twist a metaphor here and there to make things interesting. But the two are relatable. Can you guys hear me? Sound okay? I'm getting a no sound here. Okay. Thank you. So basically, it's explained as follows, and I'm going to relate this back to Forex in a minute. So picture yourself as a man, woman, child, all right? And you are walking along a beach, all right? So this is all water here, and you're walking with your dog this way along the beach. Okay? And your doggy is running back and forth. All right? But you are generally moving from left to right. Okay? So picture this overall direction that you are walking in as climate. All right? So this is your overall direction, and for us in Forex, this would be considered trend. All right? So this for us is the trend. Okay? And the doggy running back and forth, you know, he can only go as far as his leash goes, right? So he kind of runs to the water's edge, and then he comes back, and then he goes and sniffs over here, and then he runs over there, chases a ball, and then he comes back. But he's also generally going in a certain direction. However, he's able to go back and forth, and that in the context of what I'm talking about, that would be weather, right? That's the difference between weather and climate. Weather can fluctuate within the context of that climate. So yes, you might get cold days, you might get hot days, but in the overall context of it, you're going to be going in a certain direction. All right? And this is what we see on a daily basis or even a weekly basis, is that, you know, the trend or the move might go, we might see dollar weakness or dollar strength. But ultimately, it's going in the context of a certain direction. Okay, and like I said, I've already dumbed this down a little bit, but what we would like to know is how do we determine this? How do we determine this overall direction? So then the next question is, David, I'm an intraday trader. Do I need to know this? Uh, yes. Yes. I was of the opinion, I was of the opinion that you didn't, you know, I was of the opinion that you as an intraday trader probably didn't need to know climate. You only really needed to know weather. But I've changed my mind over the years. All right, and I think now if you don't, you're really doing yourself a complete disservice. All right, because I know for myself is that trading really became easier. I mean, much, 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 much easier when I was able to say to myself, right, what is my US dollar bias? In other words, am I a dollar bull or am I a dollar bear? And this time horizon is simply until it changes. Does that make sense? So in other words, my climactic outlook here is simply I'm a dollar bull until something else tells me otherwise. I happen to be dollar bearish right now because I think we've been told something else. But you know, do we trade the weather within the context of that? Yes. But I know for myself that if I have, say, if I'm a dollar bull, for instance, all right, then I'll simply say, right, which currency relative to the dollar do I think is going to be the weakest? And then I'll start rating those currencies. You know, say maybe I'll have a scale of 1 to 10, 10 being the strongest, 1 being the weakest. You know, I'll say, right, euro, I don't know. And I'm just saying for argument's sake, this is just a strong versus weak. You know, I'll say, right, the euro, I'll give that a 2, pound, you know, maybe I rate that as a 4. And if I'm a dollar bull, you know, and that my dollar bullishness might be, and obviously I'm using a subjective number, my dollar bullishness might be, say, a 7. So I'm not a ripping dollar bull, but I'll just be kind of a subtle, yeah, I think it's going to generally appreciate. You know, so maybe my dollar, my dollar sort of relative strength meter here is a 7, and then the Aussie is a 6, and the Kiwi is, you know, Kiwi is, say, a 5 for argument's sake, and then the CAD, you know, I don't know, CAD might be a 3. You know, so which ones do I want to trade relative to the dollar? Obviously, here, you know, here, to a lesser extent, the pound. But those 3, right? So how does one determine these? All right, so let's talk about that. Right, so the question is, do I trade absolutely 100% with the bias only? The answer to that is 95%. You know, I can show you my trade log, and my trade log since the beginning of 2013 is short euro, short euro, short. I mean, literally, I'll count them for you. Just 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. There's probably, I'm looking at 60 shorts, and in the last 2 weeks, in the last week, 2 longs. 2. And the longs are just because I think the dollar's overdone and the Fed's going to be a little soft. So to answer your question, 95%. Makes for some very boring trading, Alex. But I'm okay with that. I'm perfectly fine with that. And especially when the Swissy drops their floor and things like that, it's better to be on the right side of that stuff, I've determined, preferably. But yes. Now, the real reason why I wanted to, right, so let's talk about that. All right, so the question is, well, how do we determine this bias? And that's really why I'm here today. All right, so there's only so many things there's only so many things in the world that happen on a daily basis or on a monthly, yearly basis. All right. So for us, we have the Fed, and these guys control the dollar, but they also a lot of times, a change of bias is not really even related to the base currency, but a lot of times it's just related to the Fed. All right. So for example, I'm not really a Aussie, I'm not really Aussie bullish right now, but I am bullish on the Aussie dollar just because I'm bearish on the dollar for a couple of weeks. All right. Fed, we have the Fed, we have the ECB, we have the Bank of Japan, which have less control over their currency than they seem to think. And we have the Bank of England. And once again, David, do I need to know these for intraday trading? I'm going to say yes. I think you're doing yourself a massive, complete disservice by not knowing these things. And I'm the first one to tell you that you need to trade according to how your brain works. I think that's massively important. You know, that's why it's difficult to listen to peripheral analysis from people because your mindset might be different. Everybody's time horizon is different. Everybody's risk tolerance different. All right. Now, these guys only have a couple of tools at their disposal, don't they? If the economy is hot, if the economy is cold, or heading from hot to cold, or cold to hot, they have one of two things: interest rates, and more lately, QE. Okay, and they only have these two tools at their disposal, and until recently, the European Central Bank only had interest rates. I'd really love to know how the QE thing actually came about because it's completely against their mandate. And they have verbal interventions, yes, that they have too. All right, but so our job as currency traders, and this is the interesting thing, is that you don't even need to guess, is because these guys tell you what they're going to do. They sit behind a desk, and yes, there is a lot of ambiguity in how they say things. They use many euphemisms, but if you cut through the rubbish, they basically tell you exactly what they want to do. Okay? And if you've exhausted your interest rates, so in other words, you have cut your rates to zero, case of the Swiss, negative, and you've used QE and you're not using QE anymore, or you're just starting to use QE, there's a progression involved here, isn't there? All right, now you've got to remember that economic cycles, guys, take months and months and months. You're talking about huge, massive tools. I mean, huge, massive wheels here. I think that's very, 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 very important to realize, is that overall macro trends only change very, 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 like pond water molasses slowly. All right, so you don't need to be, this isn't something you have to think about all the time, right? These are massive wheels turning. Okay, so the Fed, these guys will put interest rates here and QE. The Fed, are they raising? Okay, QE, we've been there, done this, so give them a little X. European Central Bank, just starting. So for these guys, let's say that they have committed, they're only 10% of the way into the process. But they are into the process, aren't they? They've started it. In other words, we know this information. Okay? We know this information. So what happens, interest rates here, we're at zero, with zero, for all intents and purposes. Okay, Bank of Japan been at zero forever, printing money 4 days, not gonna change. But do we know this? Yes, we know this. They're not telling us anything. Guys, I'm getting some people saying no sound, etc., but sound seems okay. Okay, thanks. Right. Bank of England, cut interest rates. QE, winding this down. But we're still in the process, but we're probably 80% done. Is any new information here? No. So where is our new information coming from? Our new information is coming from the Fed, and moreover, it's concentrated here on interest rates. And our new information is really the European Central Bank here with their start of the QE program. Everybody else, is there any new central banking information out of these guys? No. Not really, is there? Okay, now, if we have a strategy that involves following central banks, you gotta remember, guys, is that the truest sort of look at anything fundamental forex wise is that yield is number one. Okay, and an anticipation of yield. Where is that going to come from? Because it might mean 2% might mean nothing for you and I, but if you have billions at your disposal and you leverage it up, 2% is a lot of money. So you're going to try to chase that around the ballpark. All right, now, if the ECB is buying their own bonds, a lot of people are going to follow that money. Okay, well, to follow that money has to come from somewhere. Going back to our little climate versus weather system, all right, there's only so much water in the system, isn't there? There's only so much water vapor in the atmosphere to condense to make rain. So if it was raining in Peru and now it's not, maybe that water evaporates and then condenses somewhere else and rains. But what I'm saying is, if there's 1 gallon of water in the whole Earth's atmosphere, there can only be 1 gallon of water somewhere else. But the same thing applies to money. Yes, they're injecting more of it, but if you are, say, going to buy European bonds, which is effectively what quantitative easing is, no, it wasn't. I had indirect exposure in terms of Euro Aussie stuff and Euro dollar things. So I did not have any Swiss exposure. But the little run on the Euro actually benefited a little bit just because of indirect Euro exposure. Yeah. And then obviously the inconvenience of not being able to trade a few things and higher yield, I mean higher margin on some stuff. But no, it did not affect me. Anyway, getting back to my example here. So if you are going to buy European bonds, which is effectively what the ECB is doing, you have to get the money from somewhere else, don't you? So where's the money been? It's been here. It's been in the dollar. So money has to come out of the dollar to go here, doesn't it? If you want to buy bonds and you've been invested in the US market, that money has to come from somewhere. So it's likely to come from the Fed, even though fundamentally the Fed would seem stronger, wouldn't they? So there's a forex transaction here to follow the European Central Bank, even though they're printing money. Does that make the dollar weak? No. But what it probably does is there's a forex transaction that's happening that will make it weak. So can you see how that's interesting to us as traders? Because we know that they're printing money. Is that news to us? No. It's not. So therefore, that anticipation of them printing money is already in the market. It's at 111. Okay? And when I hear people starting to talk about 105, which is possible, but certainly not without a bounce, I wouldn't think, I start to get skeptical about this whole dollar weakness thing. I mean, dollar strength thing. Okay? The single biggest indicator for us as traders as to when the market's reversing, guys, or when it's overdone. Do you know what that is? It's these guys. Let me see. The best indicator for trading, investing in the world to do the exact opposite is this. These guys. And when your friends start to come to you and give you trading advice. I had a friend of mine, he's a winemaker. He came and told me that all I need to do is buy a GoPro and Tesla, and I'll be rich. Very first thing I did the next day was go and buy GoPro puts. Because if your friends are telling you that it's time to buy something, it's definitely time to sell something. Okay, and the same thing applies. I didn't. What's on today's front page? Okay, and the same thing applies to. It's a camera boyki that like people use for action sports or diving or whatever, and it attaches to your head or you can put on your arm or whatever, and it's just most people that are going to buy one have one. And the only way for something to really appreciate is for there to be growth. And if everybody's got one, then right. When your friends that are doing something completely outside of trading are telling you to buy something, they're the last ones to know. All right. So my point being, I don't want to get too distracted. My point being here is that if we know the information, it's probably already been traded. So we know that there's QE going on. Yes, but that needs, for bond buying to happen, that money has to come from somewhere. So the question I'd like you guys to ask yourself henceforth is, where is the money going to come from? Does this make sense? where is the money going to come from? So, in other words, for the pound dollar to drop further, where is the money going to come from? For the euro to drop further, where is the money going to come from? All right? And I think that we are in for a little period of dollar weakness based on this. There you go, Boyki. Yep. So why would I say that? Okay, and a lot of times I will consent that I'm slightly early on some things. If you remember back in 2012, I was telling everybody, short the euro. Short the euro. Let's get short the euro. And I was looking like an idiot for about 3.5 months. It was like 134, 135, and I'm like, just short it. Just short it. Don't worry about it. Just short. Looking like a fool. 140, and then we've been down. Okay, well, now I'm saying I think it's time for some dollar weakness. All right? And I'm saying that just because we know everything. All right? And the thing is that we expect too much. All right? What do we think realistically the Fed is going to do? They're telling us they have 4% inflation or 4% GDP. They don't. A lot of it's artificial. There's almost zero wage growth whatsoever. And their core inflation is going to be way down because energy's dropped off the face of the earth. So really, realistically, our chances of seeing serious interest rate hikes in 2015 are very slight. However, they've been telling us forever that they want to normalize interest rates. They're dreaming. They're dreaming. However, they've set everybody up to think that they are. All right, so really, realistically, you know, the yield curve is going to look like this. Just, okay, yeah, all right. Oh, wait, inflation? Oh, let's play catch up. So we're going to be at like 25, 50 basis points for a long time, and then all of a sudden they're going to be like, oh, hang on. Off we go. Okay, well, Kevin's telling me I'm naive and don't know anything. It's possible. That's entirely possible. Okay? Yeah. Um. So that's the next question is, technically, you can't really afford to be 300-400 pips early or late. And I would agree with that. All right, but that's where, so I'm reluctant to get into hardcore technicals, but we can definitely touch on that. All right, so the purpose of this exercise today was to explain just how I sort of read fundamentals and how they change. All right, so I've also done kind of a very simplistic job of that, but let me tell you. Right. So my point being here was two things. Is that I want you guys to think about where money comes from in terms of cash flow. All right, so in the case of the euro, in the case of the dollar, you know, for the pound to appreciate one more dollar, how is that going to happen? Same for the euro. Okay. And then just technically there's a few indicators that are helpful, right? One of them is, I'll show you a dollar index chart here. Okay, so here's a weekly dollar index chart, and I'll zoom out as far as I can. All right, what I want you to notice is this. I'm actually going to cruise to a monthly here just for a second. All right, now, this is a 21 EMA here. Okay, and the red moving average. All right, and I want you to notice just how we're heading into this sort of high traffic area, etc. Okay, so there's resistance here just on a basic level. But I'd also like you to notice how far away this 21 EMA is from price. Okay, and notice how this distance, now keep in mind that this doesn't necessarily mention a reversal, but this distance, and obviously this moving average is going to be dynamic, but notice how this distance is far exceeding what it's done historically on an overbought, oversold sort of basis. And these distances repeat. Okay, now bear in mind that we get a new candle in a couple of days, and this 21 is going to move up here, in which case this distance that we saw in 2005, 1996, here in 2000, it's going to be identical. All right, now did these necessarily promote a reversal? No. But a healthy pullback for a month and change? Yes. Yeah, it's a monthly. All right, so the same thing can be applied to weekly. All right, now keep in mind you're running into resistance. All right, now, do we know all the news? In other words, can they tell us anything to really shock us? Probably not. We know that they're printing money in Europe. We know that the Fed is mumbling about interest rates. Bank of England's not doing very much. Apple just sold 9 iPhones every second for the last 3 months. That's no exaggeration, by the way. The Reserve Bank of Australia potentially cutting interest rates, but we're not sure. So, in other words, do we know all the news? I would say so, yes. Do we have new information? No. Has that all been priced into the market? In other words, where do we think the money is coming from? And I think it's coming out of the US and going into Europe right now. All right. So we've obviously got support here around 92.40, 93 area. We're at 94. So we're running into all that resistance. So it would stand to reason that this dollar index is likely to do sort of something like this. Okay, well, this is a 6-week period. This sort of little change on the bottom here is going to be a 3-week period, and this rise is likely to be a 3-month period. And then we'll have to ask ourselves some questions. Well, that takes us all the way out to the end of summer in the Northern Hemisphere, which is roughly when we anticipated interest rates rising in the US. And it would be interesting, wouldn't it, if we ran into that massive resistance. I'll go back to this monthly chart. We go back to, this sort of area. Right around when they're supposed to be raising interest rates and don't. So kind of something like this. Oh, no interest rate rise? Okay, cool. Let's go back here. Well, you know what I mean? And then this would be kind of September, October, and then we're selling dollars all the way down for a 10% sort of drop, which should hypothetically be kind of, I don't know, 106 with a euro, 107 all the way back to say 120. And the yen from say 120 down to 95 as the Fed disappoints everybody. And why would they do that? Because it's new information. Makes sense? Right, so we're still on a very broad look, and maybe next time we should just dig into some, those are just support and resistance lines, Kevin. It's horizontal stuff. That's what yes, Wiki. Thank you. Okay, so how do we determine on a technical level if we are early or late? Well, I like to look for, one of them is sort of separation from those mean reversion type area moving averages. The other is simply changes of trend. Okay, so here's a euro chart. Here's a daily. All right, so or weekly rather. I'll go to a daily here in a minute. But if we anticipating a change of trend, guys, you can't call me naive and then not give me a reason. You can't tell me I'm naive and don't know what I'm talking about and then not give me a reason. You gotta back that up a little bit. All right, so if we are, so what defines a trend? Okay, a bullish trend is a series of higher lows and higher highs. And a bearish trend is a series of lower lows and lower highs. All right. So if we get a change in trend from making higher lows to higher highs, all right, then we need to pay attention to that. Say around a anticipated fundamental announcement or around an anticipated technical area. All right, so we are at, let's zoom out here. Obviously, all-time lows, it might be easier to use. You know what, let's look at Aussie dollar because there is support to look at. All right. The euro is kind of going to flatten out for a while. Thanks. I mean, I think anybody's, if we've worked together a while, we have a healthy respect for each other. But okay, so here's an Aussie. Oh, it's not. That's a Kiwi. All right, here's some Aussie dollar. Okay, now I happen to think that the dollar is going to weaken just on that dollar index. I think we're going to likely go back to about 92.5, 92. We're sitting at 94 and change. Okay, so from a dollar index standpoint, I think that we're going to see a little pullback. All right, and in the euro, I'd like to see it drop all the way down and say high to the bottom again, and then kind of form a little base. And then try to hit it. And the same with the pound, kind of come all the way down to sort of 150, 60, 150 area, and then try and take that back to 154. That kind of thing. All right. So we're obviously below this little 80-50 zone on the Aussie. All right. But we are into this support zone. And notice how I do kind of broad strokes on that, because it definitely is a zone. All right, now let's say on this Aussie we start to get kind of something like this developing. Notice how for the time being we're making a series of lower lows and lower highs. All right, and I try to change the trend a little bit here in retracement mode, but it didn't really create a new higher high. All right, and it turned out to be a little continuation flag and then dropped down, and then it's been, tried to make a little change of trend, but it's been a series of lower lows and lower highs. Okay, and then if anything, this little period here gave us a little change of trend. Okay, we've got this little lower low, lower high, higher high with respect to the previous, and a higher low. I do, Boyke, and I shine it as much as I can. No. But we are in the business of predicting the market, so we do our best. Okay, now let's say that this Aussie gives us sort of something like this, because this is obviously a red zone here, meaning that this would be the sell area relative to this last drop. But in context of the dollar bias, I don't think it's impossible to expect kind of something like this to materialize. Okay, so in other words, if we came off this resistance area, created a double bottom around 77, 78, and then we broke the last two sort of highs, I would consider that a serious change of trend to the upside. It wouldn't change the weekly trend, but it would certainly change the daily trend. Within the context, remember our weather versus climate example we started with. So the climate would still be down, but the weather would be warming up. Right? So in other words, there's two ways for something to go from bearish to bullish on a trend situation. It's like this. Right? Lower high, lower low, lower high, higher low, breach of that previous high. So that would be the first example of it. Okay, the higher low and higher high, because by definition a trend changes. A trend changes when you're making higher lows and higher highs. Okay, and the other example of it is this. Lower high, lower low, lower high, lower low, and then it breaches these two previous highs. A lot of times you'll get this kind of thing happening. All right, and then this change here would be the change of that. So in other words, I would look for something on the Aussie that looks like this. This example here. Okay, and I'm anticipating it. So really, I have orders, to be honest with you, at 78, 77.50, all right, 78.20. I have orders stacked in here. Okay, but if you need a little more confirmation, there's nothing wrong with waiting either for a daily trend change or even a 4-hour for that matter. All right. Has the 4-hour given us that? Yeah. But we are coming off pretty good resistance. Your 4 hours sort of done that, hasn't it? So you'd expect there to be some serious buying through here. And if anything, I think you're going to likely get sort of something like this. And then you're going to get that double bottom, breach the high, and you can look for longs in here. Or just try to take it off the 78.5 area. Right, and you can use things like stochastic divergence, like your pound dollar, for instance. Look at this. Am I gonna? I don't know. I don't see myself doing. I'd like to do maybe more webinars here at FX Street, but check this out. That's very significant daily stochastic divergence. And I know I got a lot of lines in here, so forgive me for that. But if I show you on the weekly, you you know, you don't want to you don't want to mess too much with 52 because there's a lot there, but there's also a tremendous amount of support, and this has been a range for some time. I'm not saying it's going to go back to 160, but I think it's very reasonable for us to sort of come off here and do maybe something like this. You know, just pick up this same range that we had through here off the bottom. Makes sense? And the point is raised about stochastic divergence, and you've got it here. I mean, that's a classic example of it. You know, so here's a sell zone relative to this drop, but then you're likely to get kind of, you know, selling off there, back to the bottom. Okay, well, hold on, that's the bottom of the range, and then, you know, something like this develop. You know, on the very big predictions, very high bookie because I'm just following what central banks are telling me. You know, on the climate, pretty good. On the weather stuff, you know, on the slightly smaller things, no 50%. Hope you learned something, guys. I always feel like we squeezed a little bit for time. Maybe I'll ask Vicky if she can schedule me for a bigger block one day. 'Cause I think we haven't done a hardcore technical session in a while. So maybe we need to dig into a good old fashioned, hey, here are some, you know, dig your heels in technicals to look at. We did a 10-minute crash course here, but and then you know, I'd also like to elaborate a little more on cash flow. Yeah, I mean, you know, I don't. I hope FX3, please stop me if I'm running over. I know I'm running over, but perhaps 2 minutes just to answer Boyke's question. So have I looked at other trading methods, despite you know, outside of FX Bootcamp? And you know, I the interesting thing is that I trade the same and differently to Wayne, and that I don't think I do anything. I don't think I do anything particularly exotic. In that, you know, I'm just looking at, you know, major oversold, overbought kind of thing, and I'm looking at support and resistance stuff, and my top is absolutely right. You know, I don't even, you know, a lot of times I used to watch a lot of CNBC. I don't even watch like news. I really don't even watch financial news programs anymore because the talking heads throw me off my game. You know, the only sort of real news information I have getting fed into my noggin is trade the news and, you know, absolute hardcore fundamental information. And the rest is all my own deductions. You know, so do I do things outside of FX Bootcamp? Yeah, I mean, Wayne taught me a lot, but I think I do, you know, I do 95% of my own thing, and a lot of that is based entirely around, you know, just massive support and resistance areas and my own anticipation of where I think price is going to go. Yeah, you know, and it's just an opinion. It's just an opinion. Thanks, Medhat. And that's why I was saying originally that, you know, it's my climate versus weather example again. So, you know, the man There's a little man, and he's walking, you know, he's walking um, west to east here, and he's walking as he's going here, and the dog's doing this. His dog runs over here and he sniffs at this bush, and then he goes over here and he needs to do something else on this lamppost, and then he runs over here and he, wants to chase this ball, and then he runs. So Price is going to do, Price can do this sort of thing, but then, the man will be walking because this is its leash, and the man will be walking in one direction. So you can successfully trade this sort of thing without knowing the black line, right? You can do that without knowing this direction quite successfully. But my point is, from my perspective, I find it easier that if I know with a reasonable certainty that the dollar is going to appreciate, I'm a happier trader just putting on shorts on the euro, or shorts on the pound, or shorts on the Aussie. And even if I'm wrong on my bias, I'm still happier trading against my incorrect bias in one direction. And that's just a personal preference. Just a personal preference. So if you are happier trading the weather, not the climate, then that's cool. He's a friend of mine. Makes sense? So I would never discredit what somebody says and that just trade the charts. Yeah. And to be fair, and I absolutely don't ignore the charts. They are, massively important. But I also like to trade if the chart, said differently, I'll use the charts to line up what I have in terms of a bias. So sometimes I will not get the shorts that I want based on what the charts are telling me, and then I run the risk of missing a move. But I'm happier to do that rather than blindly trade against what I'm thinking, if that makes sense. Personal preference. Okay, guys, I hope you learned something today, and next time we'll get into some hardcore technicals, and we'll kind of talk about some plans for the next 2-3 months and line up some things. All right, and if you want to chat, at Forex David, Forex David on the twit, and we can bounce some ideas. Okay. Thanks very much, guys, and good luck further.